Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through and do our daily technical analysis update for commodities. We'll work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com, where I dive deeper into all of these topics and subjects, looking for potential investment opportunities. Sharing those opportunities with everyone in the community, sharing earnings conference calls, sharing insiders' outlooks of their sectors, looking at technicals and fundamentals of companies, doing all that stuff. And if you guys like the stock market, if you like looking at companies and trying to find good opportunities, it'd be good to join. And you can see how I look at the markets. And I think it's very valuable to see how I look at the markets and what makes those decisions. I am a long-term investor. I'm not a short-term guy trading short-term price movements, but I do use here specifically people that have fear in the market. I take advantage of that and start to accumulate positions. So if that sounds like something you want to learn or that you like, or if you just want to know the companies that have a lot of leverage for the commodity bull market that we are in, definitely sign up. We have a special coupon code that is active. We also have a question and answer session coming up this weekend, which is a Zoom call on Sunday, 5 p.m. Mountain Time. Let's dive in, take a look, see what's going on today. We've got the dollar that is slightly lower. It's trying to make a turn here, but we still have a lot of downside pressure, momentum, so to speak, with these big three gigantic red candlesticks. So this little guy here, a lot of the times what I see are like these little bounces that come up and then it rolls over. Those would be small little green candlesticks. And then the momentum will carry us lower. It always seems to get people caught off guard when we get a bounce. They're like, oh, it's going up, it's going up. You got to look at the size of the down candlesticks here and then put it into comparison of the upward force being put upwards on it. So the dollar to me looks very weak. We could have a small bounce, but I think it's probably going to roll over with time. The 2-year yield, another one where we've got a lot of downside pressure. Here's your small bounce that we're getting. What these are called are flag patterns. So you get an upward kind of movement and then another downward move. And I think that is highly possible where we could head lower. We've got the 10-year, which is another one. We've got big selling pressure coming down. We've purchased and got the reversal candlestick here. And what I said, previously is we need to see what the follow through looks like. Pretty weak follow through, and we're back to resistance here. So we'll see. And my guess would be that we could potentially roll over. Now, getting the short-term market movements correct is a difficult call. That's why I don't trade in the short term. But this looks weak, and it looks like we could go lower on the 10-year potentially. I could be wrong, and we could easily break above that, and we would see a large green candlestick. If that occurs, what that means is that people are selling bonds continually, and it's going to work its way on up. And the 30-year, that also bounced on support here. And again, we've got that small little candlestick today. Now, this one looks a little bit stronger because we've got a nice big bullish engulfing. We moved on up, and we might move something like this. So we don't really have, I call it confluence across the entire yield curve where everything will drop and everything will go up. It definitely looks weaker on the shorter end of the curve than it does on the longer end of the curve. And we might see this thing drop the short end more than the long end, if that makes sense. And that would be your yield curve on inverting. TYX TNX ratio, we are flat today, and we're at a very low level. When this goes up, if it does, it's a big tailwind behind gold. If we stay compressed down here or compress it lower, that is a headwind for gold if we compress lower. TLT, we are down 0.31%. Looking at this, and this So we've got a lot of support resistance through here, and it's going to act like a like mud or quicksand or sand, I should say. Like you get stuck in it. So you come down into it, and you get stuck. And that's kind of what I'm seeing because we've got lots of buyers and sellers here. This still has upside momentum, but we're coming up against resistance. And we'll see if we turn over and get any sort of acceleration to the downside. But that's yet to be seen. We do have some support coming across here, and that's right where we're at. Could this be a shoulder, head, shoulder deal? It could be, where we go upward. But we have to see and wait what that looks like with more trading. The 2 and the 10, we did uninvert, but it looks like it wants to try to put in a bounce here. That's what the big wick on the bottom is. But the curve did uninvert by 1.17%. If we are in a recession, and it very well could be, we would see a move lower in this ratio. And that's called uninverting of the yield curve. And you want to see it uninvert with, if it's a recession, you'll see the short end of the curve drop, the 2-year drop dramatically. And then the 10-year would also drop, but it could be a little bit more sticky and not drop as much. That's generally what we've seen in recessions like this one, and this one, and this one. But if rates go up on the long end of the curve, and we uninvert somehow with rates going up, I don't know if that's necessarily recessionary. We could be in stagflation, which makes things look a little bit different than other eras. Gold's down about $9 an ounce. This doesn't look that great if I were to look at it at face value. Lots of selling pressure here, weak bounce, and that generally will work its way lower. And what does that mean? What could happen? Well, I'm just going to give you a could. Well, gold's already ripped. It's been a major ripper, and we could, it's a potential possibility, consolidate for a while. You could see oil and the inflation stuff start to rip, which we're kind of already seeing, like copper. Copper's already broken out. You'll probably see oil turn behind copper. You'll see fertilizers take off. Those are all inflation sensitive. You might even see platinum break out. If that occurs, that's the market condition that we are in. But this hasn't rolled over yet. And if this is insiders trying to slow the move, it's just muddying the way that this chart looks. We've got silver, which is sideways today, up 0.08%. I think it still looks fantastic to work its way on up, sitting on top of a lot of support, and that hasn't changed yet. We've got platinum up 0.37%. It's still squeezing like heck into a corner here. This thing is a bomb ready to go off. And some people say, well, how do you know it's not going to go down? Because we have deficits in platinum. We are underneath the cost curve, and the producers have pulled back on production. If your cost curve is here and we're underneath it, and we've been pulling back on production because it's below the cost curve, specifically South Africa, then this has to go higher at some point when those deficits eat through all the inventory levels. The exact timing, I don't know. We've got palladium at support, and that still looks bullish. We've just got a little bit of like a flag pattern going on where we could eventually head higher. GDX down a little bit, GDXJ down a little bit, and SILJ down a little bit. They all have the same pattern, which is a bloody nose and a continuation pattern to the upside. It's a big green candlestick with just a small red down day or green down day next to it. That's a continuation pattern that I've seen in history, kind of like this one here is a continuation upward. We've got XAU to gold ratio, another little bloody nose, from a ridiculously low price level of gold and silver mining companies versus gold, and I do think it will work its way on up with time. We've got crude oil, which is trading sideways today. I know a lot of people are probably panicking. Oh my God, it's right at the support level. It could go to $50 a barrel. I mean, anything could happen, guys. Anything can happen. But let's look at the long term. The long term, this was 9/11, the slowdown here. This is what we're going to get as a slowdown here. And eventually we'll work our way on up. We have about $15 undervalued for commercial barrels of oil inventory. So commercial barrels of oil of inventory compared to the historic trading averages, this should be priced at about $85 a barrel, 80 to 85, somewhere in there. So we're undervalued from that metric. Inventories are low across the board, and we've been pushed down by the paper barrels all the way down here. Now, is this going to continue lower? Could sentiment get worse? It could. If we see the yield curve uninvert, people get scared for a recession, and we could go lower. Will that actually impact the demand for oil? It may not. In recessions, the demand of oil doesn't necessarily go down. It can still go up. And we've got a boatload of Chinese stimulus coming. So yeah, we'll see what happens. TTF gas selling off further, looking like we have lost that support area, and we are selling off more vigorously to the downside for TTF gas. Natural gas in America also down 3.55%, getting a little bit of selling pressure up here. And we've got some resistance. We are above the long-term trend line support of that blue line going all the way back. So we're trying to punch through, and we're right on top of it. Our boy XOP, yeah, you know me, down 1.16%. Again, we've kind of sold off a little bit here. Do we have the support, or are we going to have a further sell-off? If we're going to punch through this, you don't necessarily get these little candlesticks like this. Usually that's a sign that buyers are buying it up to reverse it higher. But anything can happen in the short term. News, recession, people get scared, fear. And this is the fractal of how this fell. That fractal is the fractal that I think could potentially scribe the path to go higher. Could it go down a little bit? Will this be perfect? It's not a perfect fractal. It's just getting the overall movement correct, where it may not be perfect. Maybe this is all we go before we turn higher. I don't know that, but that's what history of this fractal kind of looks like playing out. We've got OIH down 0.1%. So it's just sitting there. It's not bullish, and it could still be bearish. We've got more selling pressure to push us through out of this support region. Not much of a bounce. We need to see a bigger bounce to get bullish on it. And that may come, because some of the individual companies don't look that bad. But right now, it is still bearish, and we could still see downside pressure. Newcastle Coal Future up 0.71%. It's looking to me like this is going to try to bottom here, and we'll see if we can get a potential bottom there. Sprott Physical Uranium Trust down slightly. That is a little bloody nose. I think we're going to go higher here in the Sprott Physical Uranium Trust inside of this bigger flag pattern. We've got uranium futures pricing down slightly, and we could tap this. We could tap it anywhere in here, a little bit lower before going higher. And we could even do this before going up. And that could be driven by fear in the market, could be recession, could be a whole bunch of different things. And we could come back here, or we could even go below it like that before going higher. But we are still in a bull market, in my opinion, and that is being driven by a bunch of different charts that I watch. Let's just say gold outperforming the stock market is putting this into the condition of a commodity bull market. URA down 1.82%, so we're getting a little bit of selling pressure here. But notice that the selling pressure is subsiding. It's not as big this past day today. So maybe we can try to bottom here, and we'll see if there's some sort of bottoming characteristics. It's too early to say that we've bottomed, because if the big selling pressure does come back, then we could go lower. We've got URNM bouncing sideways and URNJ kind of bouncing sideways. It's trying to put something together. It may not be successful because the momentum is still to the downside here. Copper down slightly, but this is a bloody nose. It looks good to work its way on up. Copper is generally a metal that is, we call it Dr. Copper. It speaks for the economy. Maybe the economy is turning on up. Now, when I say economy, everyone thinks America. This could be Chinese driven too, guys. There's a lot of stimulus being chucked around over in China. China also is on the back end of a big bust in its real estate market. So it could be recovering here, and it's actually an incredible time to be invested in Chinese technology stocks right now, because that is where the recovery phase is going to move money into. They generally do stimulus, they'll have low interest rates. The demographic isn't there to push the real estate market that much higher. So I think stocks are going to do crazy in China. COPX down slightly. Again, that's a bloody nose. Looks good to go higher. We've broken the downtrend there, so that looks good. We've got iron ore down slightly. It's looking like it's doing a return, retest return move. It could still come all the way back down there if it wants to. But bigger picture, this looks like a gigantic move ready to just rip higher. It's a Livermore accumulation cylinder. We've got aluminum, which is trying to break higher. We'll see if it is successful tomorrow or not. But that is up 1.4%. Nickel's up 1.4%. This is looking like it's bottoming and turning higher, looking pretty good for nickel. We've got Mu up 1%. Again, I think this is just a retest move. Your pattern, your retest, and then a move higher. We've got emerging markets down 0.63% today. And that is with a flat dollar. But I do think this will work its way on up if a weaker dollar does come. KRE down 1.62%. It's still at the support area, and we'll see if there's any follow through to the downside. This is not follow through. TAN down 0.74%, looking like it's trying to put something together for a move higher. Lithium up 0.34. We're sitting on top of this big flag pattern, and we'll see if we can get some follow through to the upside. I think lithium looks good. REMX also looking pretty good. You can throw a trend line in here, and that's starting to break to the upside. So that looks really good. And I think rare earth metals sitting on top of support and breaking through the downtrend line is a positive for a move higher. Baltic Dry Index down slightly, but the momentum is still to the upside, looking good. We've got XHB up 0.83%. We've broken this rising wedge to the downside. Now, could this reverse? Now, if we get lower 10-year yields and mortgage rates fall, it could. But right now, it's drifting lower. We've got Russell down 1.63%, not looking too good. We're starting to break through support, and we'll see if there's follow through here or not. Will the plunge protection team come in here and save the market? What they need to do in order to save this market right here, the Russell, the S&P, and the Nasdaq, they need to lower interest rates. Interest rates around 5% on the 10-year is going to weigh on this thing. And it may already have the momentum to keep selling off. We'll see. The S&P 500 down 1.8%. This looks pretty toppy to me, where we could head lower. We're starting to break through this support region. We've got the Nasdaq down 2.6%. Looks pretty toppy to me. I'm surprised we even got up here. But, we had the elections. I'm sure there was a bunch of plunge protection team crap going on here. They probably pushed interest rates down or kept them down to push this on up to make the facade of it looking good and everything's okay. But that doesn't look too good. SMCI down 4.76%, momentum lower. NVIDIA down 5.74%. It's starting to lose its luster here. Lots of big red candlesticks showing up. That is a bearish formation. Bitcoin down, but right underneath resistance. We've got Ethereum down. That one's a little bit more developed in its pullback. And these don't look good because these are upward facing flag patterns. That is a bearish trait to head lower. Downward facing ones are bullish. We didn't break out there, we failed. And now we've got upward facing patterns, which is bearish. MicroStrategy down 1.44%. It's still hanging on for dear life here. And then the VIX is up 13%. This is not looking good. We've broken out of resistance. If this thing runs, we could see a larger pullback in the S&P 500. So that's kind of what I'm seeing in the markets at the moment right now. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. We will go over this weekend. I might go over some of the conference calls, and then also, if you guys want, I can go over maybe make up a hypothetical portfolio, and I can fill it with companies and show you how I would fill it out. If that has value, we can do that this weekend. So I would hypothetically take 100 grand of hypothetical money and put companies that I would buy right now in that company and how I would structure the portfolio and the allocations that I would do myself. We can do that for multiple outlooks too. We can do an aggressive one. We can do a less aggressive, more of a dividend cash flow type setup. And then you can see the companies of what I would pick, why I would pick it, and how I down selected to the sectors and companies that I'm choosing. They just so happen to be the ones I'm buying right now too. So, but that if you're interested, special coupon code, you can try it out or do the yearly membership and get a larger discount. But that's all I've got for today, guys. We'll catch you next time. This is Finding Value.